Good morning, good afternoon, good night. Welcome back to another schema scalper video. In today's video we're going to be looking at projecting weekly highs and lows. And as you can see on the chart, I've already marked up these areas. So all these thick horizontal lines are Sunday and Friday's trading, or Friday's close to Monday's open. So Sunday's trading, Sunday's trading. Yeah, there's no Sunday because of Christmas. Yeah, there's no Sunday because of New Year's Eve. Sunday's trading, Sunday's trading, Sunday's trading. You guys get it? Okay. Now how you want to set up your chart is you want to go on the 1 hour time frame, 60 minutes, 1 hour. You want to mark out Tuesday's midnight price. All of this is done in New York time. Tuesday's midnight price, and go back 12 candles. Okay, go back 12 candles, and then you mark out the highest high and lowest low of the body of the candles. So if you don't know what the body of the candle is, this is a candlestick. Just make it red. Clone this one. So this is a candlestick. For those of you who know, you can just maybe not skip this part because this might be interesting still. Let's just make this part black. Okay. So this right here is the high. The high. Since it's a red candlestick, this is the open. This is the closing price. And this is the low. Okay. So now you know high, open, close, low. So it goes open, expands up to the high, goes down to the low, and goes back into the range to close. That's usually how the candlesticks are formed on any time frame. So this, the top end, the black parts are the wicks, and the red/pink or green, if this is a bullish candle going up, would be the bodies. Okay, so you're gonna put your fib on the highest high body and the lowest low body 12 hours prior to Tuesday's midnight. And you see what I said there, 12 hours prior. I didn't say from Monday 12 noon. I didn't say that. I said 12 hours prior to Tuesday's midnight, just because there's certain days where there was no trading for a few hours, so you just have to extend it 12 candles from Tuesday's midnight. Okay, and how you use this is these levels on sensitive 0.51, 1.52, 2.53, 3.54, 4.55, and you're gonna look at it like, oh, you're just saying that, and you can put in any levels, but these levels are all very sensitive. When you combined the open, high, low, close, or power of 3, so if you go back to the video, the power of power of 3, you'll see the same pattern happening. You need to combine that with the times of the day. So if London makes a high and you want to sell London's high, you want to hold it until London close. And then if it lines up with one of these levels, you want to be cautious. I'm not saying close the trade, I'm saying being cautious around these levels, because a lot of these levels are turning points for the high or low of the week. So you'll see here 2.53, it got super close to 3, it didn't get to 3 exactly. You'll see some examples where it got to these levels. So it got super close to 3 at a certain time. Gets to 1 at a certain time. Gets to 2 at a certain time. And that's New York session. So if you are long, which is the open of the day, went down into London, you bought here and you see it going up 1.5, you look at it and you look at your 15-minute, the daily projections that you put in, and you see if anything lines up with this 1.5. If it doesn't, hold the trade, check again at 2, and you see it ran out these highs, all of these highs at 2. Just to go further down and create the low of the day, which is made on Wednesday, which is also important. Day of the week, expand up. So you might have not caught this expansion up, but Thursday's trading opens, is the opening price, opens, dips down, clears out the lows, and then expands higher. Now with every expansion, the numbers above, you're cautious when you're buying, right? And the numbers below, you're cautious when you're selling. So if you're buying off these levels, I'm not saying take more risk when you're buying off these levels, but you could have a bit more confidence in the trade if you say that, using both power of 3 on the daily and then this overlapping. So you're looking at this right here, that's the open, buying below the open, holding until past the open, and now you're looking at levels. So it's 3.5, 4, and then while you're looking at levels, you're also paying attention to the time these levels are being hit. So is it a New York reversal or a New York continuation day? That's also something to factor in. And then yeah, high of day comes in super close to London close, which is 10 a.m. to 12 a.m. time window, and then the 6.5 multiple, as well as the 6. So 6 and 6.5 we'd be looking out for. And that would be enough for the week, enough of trading for the week, just this range. So now again, you're in Friday, you hit 7, you're coming back into Friday. Now Friday opens over here, so this is above, that is it goes above there. So Friday's open, this is slightly above. If you're below and you bought and it comes back and stops you out, that's fine. If you waited and you thought it was going to reverse and sell off and you got in there, do now sort of ignore these multiples because they're on the sell side. So you could hold until an area like this where there's a gap, and down candle, and then yeah, next week see this 1.5. It's easier to see after the week is closed, obviously, but you need to still be paying attention to these levels during the week, because there might be a time when you are right and you take a trade off these levels and it just expands all the way during the week. The whole weekly range you could catch through these levels. Like, okay, Tuesday got taking out Monday's highs into a fair value gap, three multiple at close of the day. So if you're buying, there's not a lot of space to buy in here, but if you're buying and you're closing here, you could potentially take a reversal trade and just ride it out to the low of the day, the low of the week, sorry. This is midnight, drops down during London. If you're taking a buy here, you'd be stopped out. Further lower. Oh. Okay, now Thursday's trading. Thursday is open, goes up, comes down during London into this 1.5. And then continues higher. And that's the low of the week. You could have caught the low of the week here. Targeting the high and these highs. Now this week, Tuesday is open, goes down, could have bought, buying below the open. Holding. You are closing here above the open, that's still fine. Wednesday's trading goes below open, you're buying, and you're holding to above open, and it's already used this level. So now you're looking at the next level. Does it fall into the time? Comes in at 7, so between 7 and 9 is New York session. So is it a New York reversal? Now you need to pay attention. Okay, if it's not, where would it expand to? Would it expand to the 1.5 or above these highs? Probably above these highs. So the next multiple after that is 2 being above these highs. What time does it do that? That's between 9 and 10, which is not an area we want to be taking trades or taking profits. So the next area would be 10 to 11. Yeah, 2.5. You could take the trade off here or just wait and hold it until the end of the day. Midnight open, pushes up. Now you're looking at these levels again. 4 hits 4 during London session, so you could sell, and now you're not really paying attention to these levels anymore. Now you're paying attention to the swing lows. So the swing low, you're selling here. The swing low is first. You're watching that, the reaction of that. You're watching these gaps, the reaction in the gaps. and then this swing low over here. That's the final target. So it's gaps, 1, 2 gaps, these highs, this high, this candle, these gaps, that's what you're looking for now is targets. You're ignoring these levels because they might just smooth through them, breeze through them. Because we're above open for the week, we're above open for the day. This is, yeah, good day to sell, selling off, boom, boom, looking to close. Is it the London or New York reversal day, or is the New York continuation day? Looking at that, okay, left the gap behind, so it's a continuation day, and you close a London close, but it doesn't hit this level. Is a small gap I missed, where it does hit. So then you close there, inside this gap. Next day, Friday. Friday's opening is here. Sorry, here. Opens here as a run up. Okay. Good sell here during London. Targeting Thursday's lows and Wednesday's lows. Stop above the high of this candle, because this is a gap that's going to be left open. Target is down here, and you are looking at these levels now again, just because it's a new day. So in this day, when you're selling, you'd ignore it because it's not a new day and these are used. But now, since it's a new day, you look back at these levels. That makes the high for Friday. Like when price is moving up, you look at the levels. When price is moving down, you ignore these levels. On this side, it's the opposite. When price is moving down, you look at the levels. When price is moving up, you ignore these levels. That's that's the rule I have. So when it hits it Tuesday 5, hit your target. Then again, you see this level 0.5, Tuesday 3 o'clock during London session. Hits it, moves away to -4. You'd be looking at -1.5, but that's still in London session, so you'd ignore that. You'd ignore this candle 3, that's New York session now. This 3 level. Now you need to decide, is the market showing a New York reversal or continuation? If you're unsure, just remove some risk of the trade and leave some on. Continues lower, 3.5 and then 4. And 4 gets hit during London close, which means it's the other extreme of the day. And a close it trades out here. So Tuesday, you basically look at the high end of the whole weekly range. That would be 142 pips. So 10 pips stop, 142, 1 to 14 trade. So low of the week, I'm just gonna go through quickly now. Video is getting a bit long. Low of the week, high of the week, 2. Low of the week 2.5. High of the week, still inside Monday's range. So Monday made the high of the week. Low of the week 2.5, 1.5. High of the week 2. And you can say, oh, these are just random levels. No, it's not. Here, for the first week of December, I was looking at 1, 2, 3, 4, 5, 6. 6 levels as low of the week. Second week in December, 1, 2, I would be looking at 3 levels for low of the week. So 7, 3, 3 levels low of the week. High of the week, 1, 2, 3, 4, 5, 6, 7, 8 levels. High of the week was 4, so that's 9 levels. And this just gives you a roadmap of like how to look at your week, when you should be buying, when you should be selling, and when you should be holding for longer objectives. And when to be cautious. Yeah, you don't have to be cautious here, you don't have to be cautious here, you don't have to be cautious here, all the way up till you hit this 1.5. And you see how smooth that is. Almost no red candles since it came off this low, or this level. When it comes off this level, almost no green candles until it comes to the other side of the curve. Yeah, the same thing. Almost no green or no red candles until it hits the other side of the curve. No green candles, which is a massive, massive, massive sell-off. I hope you found this insightful. Yeah, cheers.